Hi guys, this is Bruce Rainey and this is the Build Baby Build Show. What are we building here? We're building you, we're building your business, and we are building your commercial real estate portfolio. Today I am going to answer a question that I got from a viewer. Somebody shot me an email and asked a question, so I told you guys if you send me one, I will answer it and I'll do it on the show if at all possible. What's really good about this is it kind of ties in with the event I was at last week. I think I've told you in my previous video that I did attend a conference last week. I am a coach, I'm a trainer, I'm an experienced real estate developer and contractor, and I still have coaches, I still go to events. I do that on a regular basis. I'm always getting better. I'm always trying to feed my mind, think of new ideas, new ways, and better ways to do things. Guys, it doesn't matter how experienced you get. There's always something new to learn. There's a new way to come at it. And I can tell you from this event, I learned a lot of stuff, and you're going to keep hearing for the next week or two a lot of the things that I did learn that will have a direct impact on you. They certainly had a direct impact on me. So here we go. Let's jump into one. This came from somebody, let's call them an elder in my life, someone who has been around a lot longer than I have, had a lot more life experience than me, and it's something I think is pretty common for most people to run across, especially when you have an entrepreneurial mindset, when you are somebody that thinks differently than most everybody else around you. You probably hear a lot of comments from people who say things, when are you going to be satisfied? Why can't you just be happy with where you are? Why would you want to change a job to get a better promotion or make more money? What else do you need? You got a nice house, you got a car, you got all these things, you got your boat. Whatever it is, there's some limiting belief that they're trying to install in you to stop you from progressing and evolving. I have that as well. Now, my first challenge is for you to keep yourself away from those influences as much as possible. If it's not serving you, then it's hurting you. So think about those interactions and what the value of those interactions are for you. If they're always negative and they're always holding you back, that may not be the best place to spend your time. And that's not really the point I'm trying to get at with this video. What I'm trying to get at with the video is what this person requested. The people that think small, the people who think, let's call it the old way, where there's some plateau. I've hit this spot and life is good and it doesn't need to get any better. They think about risk. The question is, Bruce, you should talk more about the risk involved. I never hear you talk about risk. You know, it's really risky to do real estate. Well, everybody, I have a news flash for you. Everything you do has risk. Getting married has risk. Driving a car has risk. Going to work every day has risk. Making decisions every day has a risk. Yes, real estate investment has risk for sure. There are things that you can do to mitigate risk. And if all you focus on is what bad things can happen in a deal, guess what? That's all you're going to think about. And that's going to create anxiety. Now, let's talk about this holistically. I'm a very positive-minded person. I'm extremely confident in my capabilities and what I can do when it comes to commercial real estate. I absolutely believe there is no deal I can't make work. Now, that doesn't mean I should do every deal I come across. As a matter of fact, it means I already go in knowing there's a lot of deals that even though they look good and I'm confident I can make work, I still need to pass on because I'm using other people's money either in syndications or funds, and I'm responsible for their returns. And so I have a fiduciary responsibility to protect their money, protect their returns, and make things safe. I can't go get crazy with people's money. So even within my high level of confidence and capability, I have to make measured decisions. In that measurement, I am measuring risk. Way down here at the beginning of, oh my gosh, commercial real estate's scary, I should never do it, that's not measuring risk, that's fear. So I want you to move from fear to risk management and risk mitigation. When we're talking about risk, what are the risks? Now, this is my own unqualified opinion. The reason I like real estate over many other types of investments is when you're buying real estate, you are buying a hard asset that you can go and touch and feel. I'm buying a building, I'm buying dirt, I am buying something that exists that has value. The building can burn down, there's still a value in it. Tenants can move out, there's still an opportunity to replace those tenants. You know, you invest in, you pick the thing, Bitcoin, the stock market, you're investing in paper, something magic that you can't go out and touch and go grab it if you need it, right? So that's why I like real estate. Now, usually the risk in real estate isn't whether you're making money or not making money. It's more along the lines of how much do you make and how quickly do you make it? And is that return something that's acceptable to you and your investors? Now, I can tell you, I could go buy a building today and pay the wrong price. I could pay way too much for that building. And I can tell you, at some point in the future life of that building, and I can't say when, this is a completely theoretical concept, but if I overpay for it, at some point that building will be worth that amount of money or even more money. That might be a year, it could be 10 years. At some point that building will be worth what I paid for it if I overpaid for it, and I'll be able to sell it and get my money back out of it. There's going to be cash flow that happens here. Now maybe it doesn't cover the note and it's painful, but at some point I could get out of that deal and potentially on paper show that I didn't lose any money. The good thing is that's pretty rare if you educate yourself and you do good homework and you buy properly. So when it comes to risk mitigation, it isn't looking at real estate and saying, oh my gosh, it's scary. Oh my gosh, I don't understand it. It's how do I mitigate that risk? And you do that through educating yourself. You can read books, you can go to networking events, you can watch, guess what, YouTube videos. You can hire coaches, you can get mentors, you can get partners, you can get professional partners. One of the very first videos I ever shot is just talking about who's going to be on your team. When you're talking about brokers and property management companies, lawyers, CPAs, all of the people in your team, these are intelligent people who've done this before. Hopefully you've gotten partners who've done it before, and you're helping each other overcome obstacles and mitigate risk rather than just point at risk and say, oh my gosh, there's this huge risk and I just don't want to do it. What we're trying to explain to you is everybody who does real estate accepts a certain amount of risk, and it's there and it will always be there. But if you educate yourself and you go through an analysis of this real estate and make good, stable decisions. Now listen, not every decision you make is the perfect decision. You might make a model where you're making a huge amount of money, and sometimes that doesn't happen. You might expect a certain rent, or you might expect to get something built or renovation in a certain amount of time, and maybe that doesn't happen for whatever reasons. You know, maybe you've made a bad guess, or maybe something's happened. That's not the end of the world. That's your opportunity as an operator to overcome a new challenge. Hey, I didn't anticipate this. How do I overcome it? And how do I still get the return for my investors? Believe it or not, those are the moments where you as an investor really shine and show your value for all of your partners and all of your investors. You're the operator. You're making decisions. Listen, guys, I'd love to tell you every decision I make is perfect. I'm very experienced. I've been doing this for a long time. And there are times when we've got to adjust midstream. There are times when we say we're going to back off on a renovation. We're going to lean in and spend more on a renovation. We're going to do another special thing because I have a tenant who wants to sign a 20-year lease, and I'm going to do something special for them. There's all of these things that can happen. You make the best judgment you can for your investors. Maybe even in some moments you go talk to the investors and say, I've got option A or option B. Which one do you think works better for you guys? I'm happy to go either direction. So be flexible and understand, yes, there is certainly risk in the world of real estate investing. One thing I want to tie to this before I get off of here is when you are purchasing, there are two people in this transaction. There's going to be the seller and the buyer, okay? Hey, remedial real estate here. Understand that The seller's agent represents the seller. He does not represent you. He or she does not represent you. They represent the seller. They have no fiduciary responsibility to make sure you are getting the correct information. I want you to understand this, guys. You need a broker that is making sure you are getting accurate information on the deal. Don't cut your broker out because you think you're saving money or saving time or whatever. Your broker helps ensure that you get good, accurate information. Guys, I work with a lot of different brokers. They bring me a lot of different deals. I have one firm in particular. I know when I get a communication from them that they're going to offer me a deal that's ridiculously priced, way overpriced. They're going to use a pro forma that they made up, and they used magic and pixie dust to come up with the numbers that they are selling a property on. Doesn't mean I don't do business with them. I'm happy to look at every deal they have, because at the end of the day, I'm going to do my own numbers, and I'm going to make an offer on that property based on what I think it's worth. So what I'm telling you is, do not trust anybody else's numbers. Run your own numbers. Make sure they work for you. They might even hand you a model. They might hand you 2 or 3 models. If that doesn't fit into your business decisions, that's okay. You can pass on that deal and move on to the next one. You don't have to buy a deal just because it's in front of you. You don't have to buy a deal just because your broker brought it to you. And you surely don't need to buy a deal based on somebody else's numbers made out of magic. Okay, guys? Pro formas. When you see the seller's pro forma, it is a really good thing to throw in the round file. Start over with your own numbers. Things that are projected in there: taxes, insurance, rents. 3 big things that can make or break a deal for you, certainly on your cash flow. So going back, there are risks. If you mitigate these risks, educate yourself, get a team, get a partnership, get whatever it is you need to get comfortable, you'll be able to underwrite these deals, you'll be able to analyze these deals, and hugely minimize the risk in your deals. Once you get those deals and you've done that hard work and you find a good deal, when you do hit a little bump in the road, it's going to be a lot easier for you to mitigate those things as they come up. Anyway, guys, if this helps, please like and subscribe below. Keep the questions coming. I do like those questions. It's email me at askbruceaquestion@gmail.com. Thanks, guys. I'll see you again soon.